Welcome to my November 2025 savings update. I'm going to do it slightly different this time. I'm going to do it in two parts. This first part is looking at all the savings news, so the new accounts and special offers that are out there. And then I'll look at the best rates right now, the highest paying accounts separately. So where should we start? Well, there are three new regular savers worth telling you about because not only are they paying decent rates, you don't need a current account to get them. The problem with most of the high paying accounts in this format, that monthly saver, that regular saver, with rates of as high as 7.1%, you do have to open up a current account. Now that's not much of an admin faff. There is a hard credit check to do that, but sometimes it is worth giving that a go. However, if you don't want to go down that route, then these three are certainly worth taking a look at. The highest paying one is from Progressive Building Society. This pays 7% for a year. These accounts always pay it for a year. The most you can pay on this one every single month is £300, which actually is pretty good compared to most of the other accounts. Very, very hard to beat this one. It is an online only account though. So Progressive Building Society with 7%. Just below that at 6.5% are two other options. The first one is from Principality Building Society, and they always bring this account around at this time of year. It's their Christmas regular saver. The idea is you're saving now for Christmas next year, so Christmas 2026. So it'll last for 12 months, but you'll get the money you've put in plus a decent rate of interest paid for you in the weeks and months before Christmas to help you win that more expensive time of the year. This one does pay 6.5%. The most you can add into it is £150 every single month. It's worth noting on this one, no early withdrawals are allowed, which is relatively common with regular savers, but not all of them, including this next one, which is also 6.5%. This is from the Scottish Building Society. Now this one, you can put into £250 a month. As I said, you can make withdrawals if you want to. Now this one though, you can't apply for it online. It's only by a post or by branch. So for some of you, that's going to be really annoying. But for others, that's actually going to be a real benefit because they don't want to do online banking. So filling the form on the post, sending it through or popping into a branch if you have a Scottish Building Society near you means you can access some of these higher rates. Obviously, there are other higher paying or similarly paying regular savers, which I'll cover in that savings rate update. Okay, next let's talk about easy access because there are a couple of high paying ones worth talking about here. And the first one is from Zopa. You'll know Zopa already. It's been offering savings accounts for a long time. And in this summer, it also introduced its new current account, the Biscuit current account, which also came with linked high paying savers. So there was that 7.1% regular saver that I mentioned. That is with Zopa if you have their Biscuit current account. They also offer interest of 2% on balances you have in that current account. And although 2% isn't particularly high, that's better than you're going to get in pretty much any other current account. So if you have some money in there, most money moved into savings accounts, but some money in your actual account itself, it means you would be earning with it. Well, they just made that account even better for savers because you can get a 1.5% boost on an easy access pot, which right now brings that rate up to 4.75%. So yes, you can get higher than 4.75% in a handful of other easy access accounts, but you're very limited in the balances there, £3,000, £4,000, something like that. So if you have more money that you want to put in an easy access account, then this is a really good option for you, particularly when you consider that regular saver as well. So definitely worth taking a look at Zopa Biscuit for all of your savings options right now. Should be saying that boost, that 1.5% boost, is only for 12 months. So after a year, it will drop down. But again, so many of the accounts, they do offer that initial boost for a year that you do really want to be making sure you've got a note in your diary to see what rates are out there after a year, if not more regularly. Now, if for some reason you don't want to go down that route of opening up the Biscuit account from Zopa, but you do want a high-paying, easy access account, then there is a new one as well from Ulster. This is offering 4.5%. Now, again, this is only for a year. After a year, that rates will drop down massively. And you have to have at least £5,000 in this account. So more than £5,000, but as with Zopa, there is no realistic upper limit. There is an upper limit, but for most people, that's not going to be a problem because it's a huge amount of money. So they are probably two of the best options now for large lump sums of cash. Sticking with easy access accounts, just a quick update for you on the Santander Edge Saver account. Now, if you've been listening to what I talk about for a while now, you'll probably know that to get this Edge Saver, you have to have an Edge current account, and you're only allowed to have one Edge current account, and with that, only one Edge Saver. Now, the problem with that is the limit on the account is £4,000. You get that 6% on just £4,000. So you're relatively limited there if you do have larger sums. Now, there was a workaround, there still is a workaround to increase that, and that's if you have a joint Edge current account, you can open up 2 more Edge savers there. So if you both had individual Edge current accounts and a joint Edge current account, then that is 4 Edge savers, giving you £16,000 at that 6% for that first year. Bit of admin, bit of faff. And don't forget, there is a £3 fee associated with those accounts as well, which does reduce the amount you can get. Now, of course, if you didn't add any direct debits to the personal accounts, you wouldn't earn cash back on the bills there, but you also wouldn't get charged the fee. So that's the way to do that if you really wanted to. Well, there's another way to boost this as well now with the new Santander Edge Explorer packaged account. And this one is way more expensive at £17 a month, but you do get to also get travel insurance, breakdown cover, and mobile phone insurance with that. And if you made that your joint account, then you'd both be covered for those things. So if you really wanted to get another Edge saver, then maybe the way to do it would be to get the Edge Explorer as a joint account, get a joint Edge account as well, but don't put any direct debits in there so you don't get charged the fee, and have the 2 personal ones, and then you could get 5 of those for £20,000 at 6%. Probably a bit of an admin faff. I'm not sure it's necessarily worth it, but I wanted to share it with you just in case. Another update for you, this one related to the Plum Cash ISA, which has been there or thereabouts at the top of the Easy Access Cash ISA tables for a while now. The problem with it before, though, was there was a restriction. If you took out more than 3 times in a year, that rate would drop down. You'd lose this bonus that you got for the first year. Well, they've removed that now. It's now completely easy access. So if you do make more withdrawals within the year, then you will not lose the bonus that's there. Of course, it's worth noting that bonus is only for the first 12 months. After that, the rate will drop down, so you'll want to shop around. It's also worth noting you don't get that bonus on transfers in, and if you transfer the money out, you also lose that bonus. But if you have that Plum ISA already, then good news. If you do need to take the money out, you can do that. But on that, I would just obviously urge a bit of caution there over the coming months at least, or this month at least, because we have got the budget happening on November the 26th. And we are expecting to find out the news around cash ISAs. Obviously covered that separately, I won't repeat myself here. But if there is a cut to cash ISAs announced, then you don't want to be taking money out of that ISA wrapper if you don't have to. Of course, if you're treating this Plum ISA or any ISA where you can make withdrawals as an easy access account because the rate is quite competitive, and there have been some really competitive ones out there, then that's different. If you need to spend from it, you need to spend from it. That's where all your savings are, that's different. But if this is about trying to ring fence it in a tax-free status for future proofing it, then even if you can make withdrawals, then I probably wouldn't be doing it. As I said, the budget is taking place on the 26th of November. We'll give you a full update on exactly what happens there, whether it's savings or anything else that's going to impact your finances. And of course, something else that's happening this month, in fact, just on the 6th of November is the next Bank of England base rate meeting. It's looking like it's incredibly unlikely there will be any change to the base rate at this meeting. Never say never. Things can happen, even in a few days can make things a bit different. But I think if we are going to see a cut this year, it won't be until the December meeting because for a few things. One, the markets are currently pricing in that the next cut will be next year. So to have one this year will be a bit of a surprise. But with that budget coming up, you imagine the Bank of England will want to see what's announced there and what impact that might have on people's finances before deciding if they want to make a cut or not. And overall, it's still looking like we won't see one this year anyway, but we'll give you an update of, obviously, if nothing really happens, we might not do a video or podcast on it, but we certainly will do update the article over on becleverwithyourcash.com. Okay, last of all, I've got an offer to tell you about is a new one from Raisin. Now, we've shared these quite often with you. They seem to happen every sort of couple of months. And if you do have at least £10,000 to save and you can lock it away for a year, they will give you a boost, an increase in your return, making them the top paying ones right now. Now, this one is slightly different to previous ones. It's up to 150 quid. So potentially you can get a larger bonus than you would have done previously. But also you might get a lower amount if you only have the 10 grand available. So if you deposit £10,000 to £24,999, you get a £40 bonus. Obviously it makes sense to just do the 10,000 and not above that because any penny above 10 grand reduces the value of that bonus. 25 grand to £49,999 earns a £100 bonus, and 50,000 to 85,000 earns a £150 bonus. So really you want to be putting it in on those 10 grand, 20 grand or 50 grand limits to really get the most effective boost to your returns. Right now, if you put 10 grand in, got that £40 bonus, it's effectively 0.4%. Similarly, it's 0.4% if you put 25 grand in to get a £100 bonus. If you put in 50 grand to get that £150 bonus, is a slightly lower 0.3% bonus on top of the rates. Now, I'll cover all the different rates in the separate update on those best accounts right now, but you're looking at about 4.35% now from Raisin. So effectively 4.75 for a 1 year fix is better than what you're going to get elsewhere without this offer. You do have to go via the link on our site for this. So remember, becleverwithyourcash.com/savings will take you through where you'll be able to find more information about these particular deals. And this one's running for a while. It's running to the end of the month, 30th of November 2025, and all those terms and conditions are on there as well. My name's Andy Webb. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.